welcome back to the channel, and if it's your first time, thank you for stopping in. I'm Stephanie Weeks, and I've been helping people with their financing for over 18 years, and my team would love to help you. Give me a call, shoot me a text, or send me an email so we can help you with your financing. Today's video is actually talking about financing and talking about a 4506. What in the world is that, and why do we have to use numbers and acronyms and LOLs and all this other crazy stuff? Well, I don't know. The IRS made this one up, so we're just going to roll with it. So a 4506T is what we use in lending, and you are going to be expected to sign with your loan disclosures. Now, your disclosures are the documents that once you're locked in and you have your property address, where we have to disclose to you what we think things are going to cost. And within that are things that we need, such as another signature for permission to pull credit, a signature on your loan application, a signature on your loan estimate, your truth in lending, all those things. There's a lot of them. And one of them is a 4506T. This is a form that you sign that we turn in to the IRS to order a transcript of your tax returns and or your W-2s. And you're probably thinking, well, what's the point of that? Because I've already given you that stuff. Well, it's an audit. So when you give me your W-2s and you give me your tax returns, okay, and we've got that and we calculate everything based on that, and we put that in the file, work up the income, in addition to tax returns and W-2s, and sometimes you don't need tax returns, but just stay with me for this video. You're also going to have paycheck stubs as well. That would be in this pile, and we would be looking at all that. Well, then what we would do is we would order the 4506T, the transcript would come back, and we would make sure, was there really 3 W-2s that totaled $100,000? Yeah, the IRS, that audit matches, okay? And did you really file this, that, or the other in your tax returns on this line item, that line item, things like that? Okay, that line matches, great, okay, the audit is complete. Why is that? That's because there were years ago when I started when they didn't do this, and apparently there was a big problem with people giving either fraudulent tax returns or tax returns that maybe weren't quite fraudulent, but they weren't filed and the customer didn't have the intent to file them in the near future or by the time the loan closed. And so therein lies why we started using the 4506T. Now, what it is it's a request for a copy of tax return, and it's gonna say the name shown on the tax return. If it's a joint return, the spouse's name on the tax return. It's going to ask for your Social Security number, your phone number, your signature, and then it's also going to be filled in by the lender to say what years and what versions are being requested. So that'll be filled out as well. Some of the other things that are some of the other instances where I'm understanding that this can come up, a lot of people since COVID that are business owners have been doing SBA financing. And SBA is using this as well in order to validate the tax returns, just like we do as mortgage lenders, that you gave them what matches what was filed with the IRS. One of the other things these types of documents tell us is if you owe money and if it's outstanding, because that can definitely affect your mortgage loan if you haven't paid the IRS the money that you owe, and you're not in a payment plan that can be verified that you've been making the payments on time, and that payment plan be added into your budget. Now, some of the other instances apparently where this comes up based on research is if people are in a lawsuit. There's actually been attorneys that are getting these completed so that they can get the taxes to verify your income if your lawsuit has to do with loss of income. And that's an example. So lawyers are using them. Of course, mortgage companies are using them. They're being used for loss mitigation. And then also, like I mentioned, SBA is using them as well. So it's part of the mortgage loan process. That's the point of this video. I know I went off on a little bit of tangent with some of the other instances where it might be used, But just keep in mind, this is the big tip, is that everything is audited when you get a mortgage loan. And you want to be super transparent, super honest, really super honest, because everything's going to be audited throughout the process. And sometimes it's toward the end. So you don't want your loan to blow up because you owe the IRS money and you're not repaying them. You don't want your loan to blow up because you gave certain W-2s and it doesn't match what the IRS had. You don't want your loan to blow up because you produced one set of tax returns that you ended up not filing. You ended up filing another set of tax returns. Those are different things that can cause blow-ups in your loans, and that is not what you want. So hopefully that's been helpful in today's video. If you want more education, I've got a lot of other videos. I've also got a book, Mortgage Peace, and I've also got the Ultimate Mortgage course as well. And then that, I even set you up all the way as far as how to put the perfect loan package together to get your loan approved. Thanks for stopping by, and I look forward to seeing you in the next video. Thank you so much for tuning in to today's video. The bonus, as promised, you wait for it. I'm going to drop a link in the description below for a free copy of my book, Mortgage Peace, which you would normally have to purchase on Amazon. I hope you've enjoyed the content today. Thank you so much, and I'll see you in the next one.